Hello, everyone. I'm Shubham. I'm the head of ecosystem at Manta and also the moderator for today's panel. So we have YQ from Altlayer, we have Johan from Sonic Labs, we have David from Tezos Apac ecosystem, and we have Alex from DeBridge for today's panel. And the topic which we are discussing is about how to build ecosystem and endure about it, like how do we analyze the performance and everything. So in other words, we can just make it as like, what do you think, like how we can make a sustainable future for an ecosystem which was generated or like launched last 2 or 3 years ago. So before starting with the main questions, I would like to give you the chance to just give your introduction and maybe a brief about like what your product is and what you guys are doing right now.
Yeah, so great to see you, everyone. YQ here, founder of Altlayer. So at Altlayer, we've been providing this kind of blockchain infrastructure services for all different projects for years since 2021. And this kind of infrastructure services, including like rollup as service, basically will help you to launch the L2s using different stacks, OP stack, Arbitrum Orbit, and all different ZK rollups. And beyond that, actually, we also provide this AVSS service. We are closely working with Eigenlayer Babylon to provide all this shared security for different projects. And beyond that, we are also working on some AI trading stuff, and we just launched this app called Rumor App since last week. Yeah, so that's all about us.
Hey guys, my name is Alex. I'm co-founder at DeBridge. So at DeBridge, we are building the fastest cross-chain infrastructure, right? So many users are using our infrastructure and our trading app in order to move between chains and capture opportunities. Many traders love our product because with DeBridge, they always have like first mover advantage, right? And we're also working with many ecosystems, for example, Sonic and many others to enable liquidity rails, right? And let users and projects to instantly bring liquidity from the broader DeFi ecosystem to their app or to the chain where they deployed on. So, yeah.
Thank you for having me. I'm Johan, and I lead DeFi growth at Sonic Labs. Sonic was formerly Phantom. Phantom is actually the second oldest EVM L1 after Ethereum, obviously. It's a pretty new chain. We launched in December 2024. It's 100% EVM compatible, 400K TPS and sub-second finality. We also have something pretty unique called fee monetization, which is essentially 90% of all the fees consumed by the smart contracts of any application can be received by the builder as revenue, and it's up to them to do whatever they want by it. Up until now, we've done almost $2 million in revenue, which goes straight back to the developers. So yeah, that's a little bit about Sonic, and yeah, thank you for having me on the panel.
Hey everyone, I'm David, part of TZ Apac. So we are the adoption entity for the Tezos ecosystem based out of Asia. So I assume that most people will know Tezos, but we also have a layer 2 solution, EVM layer 2 called Italing, and a couple more that will be rolling out environments, including Justice, Tesling, and hopefully even more than that. So one of the big things that we run out of Asia is 45 Labs, which is an accelerator program. The idea is to be sort of like the most people-centric accelerator program where we sort of like hold the hands together with the startups to sort of like get them to product market fit, get them to market, help them figure out like how do they reach revenue and like even raise funds. So happy to be in this panel.
Awesome. So actually, my question was like first for you, YQ, because apart from Alex and you, we all comes from a layer 2 or layer 1 background.
Yeah.
So first question for you is like, you have seen a lot of layer 2s and layer 1s coming around. Definitely, it's a profitable business for you. But do you really think like all of these layer 2s and layer 1s are really necessary to be built? Like, as we are also a layer 2, I know that I can count on like my fingers how many users we have right now, and I think so more than these we have the layer 2s. So what do you think? Like, is it really good to have all these layer 2s coming up in future, or there should be another strategy where we can actually monetize these layer 2s or layer 1s?
Yeah, super good question. Like for us, since 2021, we are really providing this kind of chain services for a lot of projects, right? And based on our like sort of conversations and also collaborations with a lot of projects, we feel that actually the this kind of tipping point was around the mid of last year. Before that, for the past few years, it really because of this narrative driven. It was super hot since 2022. Basically, a bunch of projects just want to launch either L1, L2 using, like, for example, OpenStack, Arbitrum, or the ZK rollout, right? At the time, there was a lot of hype for the VCs to put tons of money into these ZK technologies and also the rollout space. But I would say, like, for that period of time, it's really about this narrative driven. It's basically people feel that, okay, like everyone just launch a sort of a general purpose L1, L2, and then we hope we can get a lot of developers to grow the ecosystem. And because it was super successful with the launch of Arbitrum and Optimism Manta, right? So everyone want to copy that playbook, and also VC put tons of money into it. But the reality is, like, since last year we saw it, we couldn't really have a lot of users and developers into the ecosystem because of too many chains. And then by that time, it was really the real demand, at least for us, like, because a lot of people want to launch a chain so they can at least get some high valuation when they do a fundraise. But since like sort of around the mid of last year, we feel like the shift really became from this narrative driven to sort of this the real use case. So right now, there's still a lot of projects want to launch chains, but they really have the real product market fit. For example, there are a bunch of perpetual exchanges, right? They want to copy a playbook of Hyperliquid. Hyperliquid is an L1, and a lot of chains like Lighter, they are doing this L2, ZK L2 on Ethereum, and almost all the perpetual DEX, they want to launch their own chain because like the existing chain couldn't really fulfill their requirements of this super low latency. It's not just a sub-second, it's like 20 or 50 milliseconds. Beyond that, they also want to capture all the fees. And also some payments, stablecoin, as you mentioned, right? They also want to capture all the value themselves. That's why launching a chain is a natural fit for them. So we can clearly see that previously it's really narrative driven. They want to launch a chain to boost their FDV. But right now, a lot of projects, because they really have the demand for super low latency, capture all the value themselves, and then sort of like it becomes from the general purpose L2, L1 to this kind of application focused L1, L2. Yeah.
Got it. So actually, this is also a good question. The next question which I'm going to ask. So we are around 5 people sitting over here. 3 are coming from the chain side. Everyone over here, whenever they want to go to a business or they want to work for any particular Web3 project, they first go to a chain. But actually, all the other 2 projects are revenue making, and we are still working and fighting for the same developers, and we are fighting for the same gas fee. So do you think, like you mentioned about Hyperliquid and Lighter, so they chose a model where first they build a product,
Yes.
and then they become a chain. So do you think, like, let's say if I want to launch a Shubham chain in future, which will be a layer 2, so should I clear a first product, have a product market fit, and then launch a chain, or else it's okay, like just go with the layer 2 or layer 1 first?
The thing is, like, at least based on our experience, right? Feel that previously, because we still have, we don't really have a lot of these kind of concrete applications, like sort of on different chains. So it's still making sense. Like basically, you build a general purpose L2 and then onboard a lot of users. You guys also was quite successful onboarding a lot of users, right? And the thing is, like, as you mentioned, right? I just feel like for the next few years, it's basically you have to have a product market fit application. And if you can have a lot of users, then it makes sense for you to have a chain. Beyond that, if you don't see the bottleneck of like sort of your own application, right? If you're not building a perpetual DEX and you really need the super low latency and high throughput, probably it's best you just stay on some existing like sort of chains. For example, Pump.Fund. It's good, like they can directly enjoy all the liquidity on Solana. If you build your own chain where you can bring all the liquidity, right? So that's a trade-off. If you have your own chain, it's better like you don't expect a lot of liquidity move from the other chains to your own chain, but at the same time, you really want to enjoy all the liquidity on the existing chain, for Ethereum, Solana, or Base, right? Then it's better you just build your app natively there. Yeah.
Got it. So I think so. Alex will help me to interrupt all these liquidities from chain to chain. But yeah, so before coming to this panel, we were discussing on the backstage about intense AI and stuff. And there is one fact, like we have been discussing intense like recently around a year. But Alex and DeBridge team is going to celebrate their 3 years anniversary this time to complete all these intents and launching that. So, Alex, what's your opinion? So, do you think like after building all these chains and layer twos and all these ecosystem coming around, everyone wants to make their ecosystem successful, right? So, the first and the foremost part is about the interoperability, and second one is about the intents because I don't want to go to Sonic, bring my ETH, then bridge it back to some other chain, then swap it to some other thing. So intents are really important on that particular side. So what's your opinion? Like, do you think like intents recently just boomed as a marketing gimmick, or it was actually some of a good use case which we can use? And maybe like what are the future use cases of intents which we will be seeing?
Yeah, I think first of all, it's important to understand that in the cross-chain and in the interoperability space, there are multiple verticals. All of them are super important, but the main one, the foundation, is messaging, right? Projects should be able to send like authenticated data between smart contracts on different chains, right? And messaging is sort of foundation, but like regular users, like they don't need to have a clue about messaging, right? The main use case is kind of moving liquidity, right? The main use case of DeFi is like trading, right? And that's why on top of messaging, there are like two main cross-chain verticals. First one is the asset custody, right? The asset custody is when you want to bring some asset to your blockchain ecosystem. So let's say you have ETH on Ethereum, and then you want to have ETH on Sonic chain, right? And you need to have like custodian to who would be in charge of the collateral that is locked on the original chain, right? And many ecosystems are solving that through by building their native canonical bridge, for example, Arbitrum, Sonic, Optimism, and others. Some ecosystems are solving this by using kind of cross-chain token standards, right, issued by different bridge providers. And the problem here is that like this asset custody vertical is actually super complicated business, right? Because if you're a bridge and if you're focused on asset custody, then you take on a lot of responsibility for the TVL. Imagine you have like a few $1 billion of TVL, you can't sleep really well, right? And at the same time, you have no way to monetize on that TVL because like classical custody bridges, for example, Circle and Tether, right? They can manage the collateral. They can use USD in banks to buy short-term American treasuries and generate some interest, right? And then they issue derivative like USDC or USDT on the other chains. So for bridges, it's very different business. You have no way to manage collateral, but at the same time, you have huge responsibility for the TVL, and you cannot monetize it, right? And that's why in DeBridge, instead of like focusing on the asset custody vertical, we started from the cross-chain trading and intents, right? Because assuming that asset already exists, it's already custodied by someone already took the risk of TVL, you can just like market make or like make that asset tradable instantly on that chain through intents, right? In DeBridge, like 3 years ago, like this Sunday going to be, as you said, the 3 years anniversary since we announced intents and zero TVL design. So in DeBridge, we are focused on instant trading, where you can have like minimal risks. You don't need to have TVL. It's like zero TVL design, but at the same time, you let users to move or trade any assets on the same chain or like the cross chain, right? So the solver just holds the asset on the balance sheet and then fulfills the trades, and it's some like from time to time it just rebalance inventory, rebalance liquidity using the canonical custody bridge, right? So basically, like solver can process like few $1 million in trading volume and then just send one cross-chain message using like custody bridge or like custody solution and rebalance inventory to make sure kind of balance sheet is equal. So yeah, this is like how we look at things, and I think that like trading vertical is one of the most important, so that users can like they don't need to think about like bridges. They don't need to think about like how do I bring the token. Just open the trading app and can just trade anything to anything in a single click, and the settlement happens like instantly in a matter of seconds because solver takes on all the risks. Like with custody bridges, you have no way to make it fast because like custody requires maximal security guarantees and maximal kind of finality requirements, while with intents, like solver can take any risk that he wants because like if something happens, like rework happens, then solver is losing money, not the user, right? And for custody, the other way around. So yeah, this is like how the cross-chain space is kind of structured. So two verticals, custody is important, but hard to monetize. That's why many ecosystems like building their own custody solution, like native bridges, because they monetize through ecosystem adoption, you know, and kind of usage of the infrastructure. And the second vertical is like trading and intents, where like DeBridge and bridges that are focused on cross-chain trading can kind of enable the instant trading experience for end users.
Got it, got it. Okay, Johan, so on your introduction, you mentioned that Sonic was previously Phantom.
Yeah.
And we all know actually Phantom from a very long period of time. But you notice that XRP, Cardano, all these ecosystems have been doing really well in terms of token. They have one of the been pioneer. I think most of the people know about it, or maybe they hold all these tokens. But when it comes to rebranding, you rebranded it to Sonic, and I know actually there are a lot of developers. After rebranding, they just came and started working with you guys. They started deploying the contracts and stuff. So, do you think like it was just about the marketing thing, or it was more about the tech upgrades and other things where people were actually excited about? Because you also mentioned you have around 400K TPS, right? So do you think like we have around 400K users right now who are doing just one transaction every per second? So do we need that much speed?
I mean, yes and no. So, I mean, TPS is also the wrong way to measure speed. It's actually, how much gas per like second or how much gas per millisecond you can do, because like the complexity of the transaction is, how much gas you can essentially spend. So that's the right way to measure speed. Even though like, people throw TPS, like even though we have 400K TPS, like we barely use it because, for example, like I think the most transactions we've done in a day is about 1.8 million, whereas we can do about 100 million transaction a day. So we have a lot of buffer, and we don't. I mean, I don't think the industry has enough users for us to, make use of the entire potential. And also with respect to the brand, like the rebrand, we didn't upgrade Phantom. Sonic is a completely different chain. So, both are isolated chains. So it was like quite a big challenge, not just marketing, but the first thing that people want is like, we had Hard Hat, Etherscan, Chainlink, bridging providers like DeBridge was actually the first like intent-based bridge on Sonic because people want USDC, and I'm pretty sure like you're familiar with like we all know what happened with multi-chain, so we also built our own bridge, completely secured and decentralized as well, secured by our validator network. So God forbid the chain goes offline, there is like an escape hatch where after 14 days you can automatically withdraw your funds from on Ethereum. So all that took a long time, and we had a different token as well, so it was a completely new listing process in all the exchanges. Like every single exchange we had to do it, and I think we were the first chain to sort of like rebrand, not with upgrading the existing chain, but making like a totally new chain. So yeah, I mean it was pretty challenging. It was like a lot of work. It took more than a year, and I think yeah, we're pretty happy with where we are. Like we have all the infra, we have the devs are happy, and we also built something called fee monetization, which was not there on Sonic. It's an enshrined feature. Like it's a feature of the chain where 90% of all the transactions, like the transaction fee that you generate, can be claimed back by the user. I think DeBridge is also like using it. So, and you can claim it like every 24 blocks, which is like an epoch. So, it's not once a week or anything. It's like, every few minutes or seconds, you can actually claim Sonic back and like use that for your OPEX, which is not there on other chains. So, yeah, that's pretty much where we are at. And Sonic has always been like a very DeFi focused chain. And our users love DeFi, and like Andre, who's like the CTO of Sonic, also is like people consider him the godfather of DeFi. So people always resonate Sonic with DeFi, and that's sort of the direction that we are pushing in, and like trying to establish ourselves as a big player. And for DeFi and like high performance DeFi, like going back to your first question, like we do need like high TPS. And in your first question, you mentioned, do we need all these L2s and L1s? I don't think so, because theoretically, like this is a fact. If Sonic were to consume all the transactions of every single L2 today, we'd still have like, it still won't be like 50% of our block space. So block space is not scarce. And when you start a new L2, like, sure, you need liquidity, but you also need infra, right? Are you going to pay Circle millions of dollars? Are you going to pay Etherscan millions of dollars? Like, there are a lot of costs that people only realize, when they build a new L2. Like, people are not going to use shitty block explorers. Everyone wants Etherscan, but can you pay for Etherscan? Can you afford Etherscan? And Hyperliquid also, they have a new chain. If they wanted, they could have built the whole thing on Sonic and been like more profitable, because they have zero operating costs. They don't have to pay for their block explorer or whatever costs they're handling. Like, we could have taken the whole thing, and like Sonic is faster than Hypercore. So, they would have had USDC a lot earlier as well. They just got it a few weeks ago. So that is the advantage of building on an L1, and it's decentralized. So yeah, that's pretty much it.
I wish Daniel was here. I could have told him to have a fireside between you guys to see if more L2s or less L2s were. Okay, so coming to Tezos Apac. So, like before jumping into the ecosystem which you have right now, I know you guys are running an accelerator program. And just before this panel, I heard every VC is shifting their focus from investing to incubating. So, what's your strategy on the accelerator side? So I see Alex PFP. It's from Alliance DAO as well. So it is an accelerator too. So what's the difference between the Tezos APAC accelerator and your accelerator?
Yeah, I think like just generally, I think the term accelerator is very vague, because like how it's defined between different parties, they run it differently. Some of them are like, yeah, accelerator program, we take some of your tokens and we give you marketing support. There are other accelerators that are like, okay, let's give you a grant, give you like 200K, and you are part of, you can use our branding. So I think there's very, very different like forms of accelerator. How 45 Labs, which is our accelerator that we're running, is more of like we feel it's a very people-centric accelerator, where we have almost a ratio of like 2% from our team for every project that we sort of like take care of. And I think that's a fantastic number. You don't go to a school and then you like, I have 2 teachers to one student. So I think that's how we sort of like go with that direction. And every startup, they are at different phases. They have different requirements. A project like Apac Dex have a very different requirement compared to a project that's like more artist focused. So that's how we try to fill in the gaps. Some projects, they lack product market fit. They have no idea how to solve product market fit. So even if you give them $200,000, they're still not going to solve their product market fit, because they don't know how to go about it. So that's where coaching is important. There are projects that, especially in Asia, I think a lot of founders, they don't know how to pitch. They might not have the confidence. And sometimes confidence is something that, you have to sort of like get them to do it a lot of times. And then they have the competency, and they'll be like, if I have the competency, I can actually be confident. So that's where we have like our partnerships team. They open the doors so that they can actually start talking to VCs, enterprises, and from there they sort of build up their confidence, and they can actually compete on an equal footing compared to a lot of like the founders in the Western world, where they are doing that on an everyday basis. So I think like sort of like trying to help these projects and working together with these projects and building this relationship with these projects, I think that's what makes them very sticky to the benefit of like the Tezos ecosystem as well.
Got it, got it. Okay, so like as we all are almost coming from a like different forte. So I just want to have a simple question to you. So like maybe for Altlayer, it will be more chains coming in and different kind of chains, what their use case are and stuff. For Alex, it would be like more about cross-chain interoperability. For you guys, it will be more about developers who can bring more users to the chain. So what's the next thing which you look at where it can actually improve the performance of the overall industry, particularly your category? And also, what is the one thing you want to improve in specifically your product? Or maybe you're already improving it. So, like, just some more information about it, starting with you.
Yeah, so the thing is like we feel because I started to do this kind of scaling research exactly like 10 years ago, in 2015, with Vitaly and Ethereum Foundation people doing this sharding, and later the app chain and then roll up. Right, you figure like right now probably it's already quite mature for most of the infrastructure. If we really want to provide this super low latency, high throughput, and also super cheap sort of a gas fee, right? We feel that for the next step, at least for Altlayer, what we want to provide, one is, as I mentioned to you, right, the rollup as service with supporting all the different rollups and also the Legos of different stacks, right? And beyond that, we also working with Eigen Babylon to provide some extra decentralization and also faster finality layer on top of the rollup. Because like for the existing rollup stack, we all know that there's some shortcomings on decentralization. Also, the latency is still pretty high. And that's a part like we're working with a bunch of our partners to further reduce the latency from like 1 second to like sort of 100 millisecond or something like that. And beyond that, it's really about this distribution channel because we foresee in the future for all the application or projects, even they have a lot of users and also the chain super fast, but on our side, we need to figure out, okay, beyond that, the infrastructure, how we can provide a very unique distribution channel for you guys. So in that case, we can further help them to basically push their product, especially the application chains, into their target users. That's why, like, sort of what we're building right now is kind of AI power, this kind of rumor platform. It's not just for trading, but also for the existing and the future customers we have. We can also help them to push to different distribution channels and onboard more users. Yeah.
Got it. Alex, what do you think? Like we already talked a lot about intents, which is already here. So what's the next thing like which you think is really important right now and no one is talking about it?
Yeah, so in DeBridge, we've been known as the fastest and one of the most secure bridges, right? And our motto says DeFi does not wait. So our users are those who don't like to wait, right? Because we all are impatient and like time is money and we need to move fast. And we start from like cross-chain, right? And enabling like the best cross-chain trading experience in the market. And now we are moving toward our goal to make DeBridge to be everything exchange, right? It's sort of DeFi trading super app where you don't need to think about like chains, about gas. You just want to trade something to something, right? If the asset is liquid and if it exists, then it should be tradable. And on DeBridge, you're going to be able to trade anything, anywhere in a single click. But on top of that, also have the best trading experience. So to give some alpha, we are now working on the gasless protocol that is built on top of our existing infrastructure, where users will not even need to like broadcast any transaction. So user just like sign the intent, and then it's immediately getting executed by the solver, right? So and at the same time, solver can like aggregate all on-chain liquidity, just query all liquidity providers like 1inch, PowerSwap, 0x, like Kyber, and many others, simulate them all, and pick the best one based on the outcome of the real simulation, right? And that kind of guarantees the best execution rate for the end user, but also like the gasless flow, since like the routing is moving from the user side to solver side completely. The gasless flow also enables like all the sophisticated trading instruments that users have on Saxes, right? Such as TWAPs, conditional orders, take profits, stop losses. Like everything that we have on Saxes is going to DeFi, and it's coming to DeFi. And I think our goal is like to let users trade in a non-custodial fashion, you know, without need to bear any custodial risks. And yeah, I think it's just a matter of months before we see that
Got
happen.
it. Got it. Okay, Johan, so you come from a layer 2 background, like sidechain background. You come from Polygon before. You are working with Sonic right now. So what is the difference between, like, not just Polygon and Sonic, but in general in the industry, which you have seen till now? Not about the TPS and stuff, but in general the practices and stuff. Like, what do you think? How we are either going on the right direction or we are going on the wrong direction? Or if not, then what is the big thing which you are expecting next in the overall layer 2, layer 1 ecosystems?
Yeah, I think in general, L1s and L2s are like, I would say, going in the right direction because I think now we've realized that, in order to have a sustainable blockchain or an ecosystem, there are like two main important factors. One is you need to have a moat for developers and you need to have a moat for builders. The first part, like for developers being like, you need to be able to offer developers something that they cannot get elsewhere. Like if you look at, chain A and chain B, like both of them are EVM compatible, and if you can just deploy your code like in A and B, and there is not really much of a difference. So, what is stopping a builder, or what is keeping builders from like launching on another chain? Like you need to be able to offer them something. So at Sonic, like that's why fee monetization is like a huge part or like a big selling point of Sonic, because we offer something that no other chain or no other L2 can offer securely. Only an L1 technically can. So that is what I would say is like a moat for developers. And obviously you need to have like 100% EVM compatibility and all the other dev tooling, which a lot of people have. So it is very competitive. The second angle is, I think chains have realized that it is better to sort of focus the chain on one specific or a few use cases that the tech sort of facilitates or like highlights. For example, uh, I'll take examples of chains other than Sonic. So if you look at Mega ETH, they sort of brand themselves as like a very, high TPS and like basically a fast execution chain. So they're not really focusing on, liquidity pool dexes. They're focusing on clubs, on-chain order books, on, order book based perps, etc. So you need to sort of like, you need to differentiate yourself from the other players out there. So like, if you want to trade perps, like where do you go? You go to Hyperliquid. So they have created a moat for users because nobody would go anywhere else to trade perps. So the best analogy is like if you want to climb the tallest mountain, like you have to go to Nepal, and there's never going to be another country, that has a higher mountain. So similarly, every like blockchain has to sort of basically identify the the best use case that the tech facilitates, and you know not basically jump on every trend and try to capture like a little bit traction here and there. Rather than that, just focus on like the core applications or the core sectors that you are strongest at and sort of deliver products there. So you have stickier users who are not there for the airdrop for but to actually use the product. So that's sort of where we are focusing at, and we really want to showcase the speed and the tech of Sonic through our apps. Yeah.
Got it. Okay, on the same line, David. So I know Tezos from a long time, and I think so everyone knows Tezos from a long time. What do you think, like specifically on the ecosystem side? What are the major differences you have seen in last 2 years for Tezos, or maybe in general? And which is the one narrative you are too bullish on? Like maybe it's institutional investment, it's about stable coins, it's about DeFi specifically, or maybe specific primitive in DeFi. What's your major goal, or maybe what things you would like to see in future more?
Yeah, I think generally for just to sort of encompass everything, right? Like, I think there's three sort of general directions that different chains go towards. There's the general purpose blockchains. There are the vertical specific blockchains, and there's also like hyper EVM, which is an application a built blockchain. So I think that generally, like, if you look at like the Tezos and Etherlink, the whole ecosystem, it leans more towards the general purpose blockchain. And I think like the core value that any block L1, L2 will provide is that to provide a fantastic developer experience. And the way I see it is that we're not sort of like competing for the same pool of users, but how do we expand the pool of users? How do we get other developers from that is blockchain developers to start building on the chain, to build their applications, to build the next Instagram, to build the next WhatsApp, whatever on the chain. I think that's the stuff like where we want to get at, and that's what the Tezos X is all about, which is actually to sort of like provide other environments where actually JavaScript developers can start building on the chain. You don't need to reduce the sort of the hurdle where I have to sort of like pick up Solidity, which is it's pretty easy to pick it up, but like it's still a hurdle. People still have to read up on it. So I think that is key, but also like what are the infrastructure in place to sort of like support these to support these founders. So that's where 45 Labs can come in, and the last thing, which is also like how does like all these applications improve the user experience. I do think that like the blockchains, wallets, they are not very easy for like anyone on the streets to sort of like pick up and actually make a transaction. I do feel that AI would solve the issue, similar to like people are actually using like sort of like ChatGPT. Pick me the watermelon that I should actually pick from this like rack of it. So which one would be the sweetest? So I think that would sort of like solve a lot of the distribution and user onboarding experience. But I think like generally like a very good developer experience, as well as like how do we improve distribution. That would be sort of like the two things to look at.
Got it. Okay, so actually we are running out of time and they want us to go back. So, okay, thank you so much, everyone. And thank you so much, guys, to share your thoughts. And we had a lot of like different opinions over here. But yeah, thank you so much for joining us.